Hello and welcome to Business Today Television. I'm Siddharth Zarabi and with me my colleague Shailendra Bhatnagar. You're watching Market Today and the market master on the show with us today, one of the most well-known names in the investment world, A Balasubramanian, the Managing Director and CEO of Aditya Birla Sun Life AMC. Welcome to the show, Bala, on this historic Monday, a Monday that has come after GDP bumper growth and then even more bumper exit polls, which seem to suggest that even 400 plus might be in the offing for Prime Minister Narendra Modi and his NDA government. Your first thoughts on the kind of impact that the exit polls seem to be having on the markets? We have seen fresh all-time highs. Is it a case of expected lines or is it irrational exuberance at this time?
Yeah, thanks for that. Of course, first and foremost, I would probably attribute the reason to your channel, who put the number at 356 to 401. It came straight on the top. So I think your survey suggests that exit poll results will be more in favor of NDA government, and I'm just telling you on a lighter vein. I think the fact of the matter is one, the exit poll numbers. It was more or less in line with certain expectations of the market people. At the same time, it is also came as a surprise to most of the people who are also building, in some sense, a pessimistic view on the market. Given the fact that markets have gone up, they were looking at finding reasons how the market can come down. So one of the reasons probably people would have attributed that the number of seats what the NDA will win will be lower than what they had put for themselves. Whereas the exit survey seems to be confirming what they have been aiming for between 360 and 400. The number seems to be at this point of time falling in place. As a result of that, this is one of the things which I have been maintaining for quite some time. For a change this year, there is a rebirth of buyers in the market, and probably the people had taken a pessimistic view as well in the overall market. They were building a short position for the last few weeks. I would assume if you again go by the FI numbers, especially when the election is around the corner, they have been the largest seller in the market, which essentially means I'm sure a set of market participants would have taken a negative call and they would build short positions. And today's movement, I would probably attribute to the short covering on one side. And second is when the actual results comes tomorrow, if exactly the same as the exit poll numbers, or probably even better than the exit poll number, then you will probably see the euphoria coming in and some bit of what I call it in old term, we call it the love types, will also happen in some sense. Which I think we should see that after the results, election results comes in tomorrow.
Okay. Bala sir, Shail this side. I have known you since 1996 when you started trading bonds at Aditya Birla Sun Life Asset Management Company. And I have never seen such wider smile on your face over the last 25 years. First, tell us the reason behind this smile and then we'll get to the nitty-gritty of the markets.
Of course, smile is the permanent signature of mine. Therefore, smile is never new to me. I believe in keeping a smiling face, very important when you are customer facing a business when you are there. I always believe that though I am an MD and CEO, I'll consider myself as a relationship manager, so to speak, from every business activities. Of course, a time like today, I'm also feeling happy, not for anything else. I've been quite bullish in general, both on the election outcome as well as in general on the market. Including certain segment of the market, I've been quite bullish. Not because anything else. I have been a firm believer that the ground level improvement that you have to look at it.
Yes.
When I did my Bharat series as Aditya Birla Mutual Fund, I did a tour to the smaller unknown cities, which I call the Bharat series, covering digital economy, covering agri economy, covering the educational system improvement, culture, and so on and so forth. I came back very positive in that period of my own engagement at the ground level, which is nothing but a ground level reality. So I've been quite bullish and confident of the ground level reality improvement that is saying. So to the extent I'm feeling happy that the equity market in some sense, the public at large, endorsing the good work that is done by the government, which has of course gone to benefit large segment of the market, both at the industrial level, economic level, as well as the public at large level. So that I think makes me feel happy. Second, of course, market. I think when somebody is taking an opposite view, and if we generally were a bond bull, and any such pullback in the market on the basis of this kind of initial outcome after the exit poll, definitely makes you feel happy. I think they're all about combination of many things, but it doesn't mean that your market has fallen, therefore you'll become unhappy. It doesn't mean like that. Given the fact that you need to be optimistic, you need to be happy if you want to drive larger momentum in the business.
Bala, after the initial celebrations, currently we seem to be celebrating the GDP data, perhaps the return of gold, and of course the exit polls. Will the market potentially see some profit booking, because earnings will also need to catch up, for example? So what's the sense you can offer our viewers for the short term?
I think Siddharth, if you look at the way the market, I see the economy, one, the GDP growth makes it more sustainable as we move forward. If once the election result is over and then the ministry is informed, my own belief is what they have done in the last 10 years, there is high probability they may fast track some of these executions in the next 5 years. Therefore, we may probably be able to see a sustained growth of about 8.5% GDP number. Second is the tax collections have been showing a continuous improvement. The recent Reserve Bank of India announcement of giving a high dividend, definitely making the government of India to become relatively better in terms of fiscal roadmap. There is high probability India would put a roadmap for fiscal consolidation in the next 3 years, which most of the global economy are not talking about it. Therefore, India will probably stand out a little different on this space. And third, of course, is on the basis of the fiscal improvement, there is high probability India may be looked at for a 2-notch rating upgrade. I'm not even counting 1-notch rating upgrade. I am counting for 2-notch rating upgrade once the JP Morgan bond index money comes in the month of June. About $25 billion may come into the country. I think we'll look at it on a holistic basis. I think we'll see a significant improvement that comes on the market. From a market point of view, the cost of borrowing, if the fiscal deficit comes down, government borrowing comes down, there is high probability the interest cost in India will remain stable and maybe come down. Therefore, when the private capex comes in and the funding will become relatively easier, therefore the cost of funding will also become what is called the cost of capital will also be very, very reasonable for people to actually pursue more expansion activities. Therefore, earnings will be one part of it from looking at valuation point of view. But if you look at the macro point of view in terms of macro development, will continue to be the driver of the optimism. That's why I see it. From an investor's point of view, of course, when the market moves up such a sharp manner, it has to go through some kind of consolidation, some bit of profit booking has to come. But the question is, where will the profit booking come? And wherever there is a huge ownership, then we can probably expect the profit booking to come. Wherever there is no significant ownership, especially if you take PSUs, you don't have bigger ownership, there are certain segment of the market, still you don't have much of ownership. Therefore, those counters, it's very rare to expect some bit of profit booking will come. Given the fact the ownership itself is so thin, how much of the selling could come from that, despite one may assume that valuations are costly. I think that's where I see the real big pressure on profit booking may not come big time, given the fact the FI ownership has been going down, domestic mutual fund AM ownership has been going up, and mutual funds will continue to be the driver of Indian, from the equity market point of view, provider of capital, and therefore you will probably see the optimism stay for long. But at the same time, market will go through a consolidation, but it doesn't mean it'll get into the pessimism.
Okay. Siddharth, one of the least appreciated parts of India's Goldilocks story is the dramatic improvement in the macro balance sheet, which both you and Bala have pointed out. Remember, Bala started as a bond trader, as I have mentioned, and now he runs about 3,60,000 crore rupees as assets under ABSL AMC. Bala sir, what do you think of this private capex cycle which might now come up, because there is a clear mandate for the next 5 years, And last 3 we have seen the government pump priming the economy across the infrastructure space. Do you think private business groups will now step on the plate, step on the gas, and maybe pick up the baton from the government over the next 18 months?
I think it's a big change coming in the private capex on the back of continued government spending. I think will remain. The fiscal improvement that we have seen definitely I think will be used largely in a productive manner to improve the overall government spending will continue. And there are many areas government already identified, including makeover of railway stations and so on and so forth. And that's something I think is going to be the government capex. Along with that, there's also a shortage of supply. I think I see actually demand supply situations. I think is more towards demand in most of the engineering segment of the market, especially power sectors. We will probably see some short supply, and therefore the private capex will see a significant pickup. Announcement could come in the private capex this year. So probably I would adjust budget. The year of 24, 25, 25, 26 could be the year of significant pickup in the private capex, which probably would set the ball rolling for the next round of growth. And the third, which I'm seeing actually a significant improvement that could come, and so far the consumption theme in India has remained somewhat muted. Given the fact fiscal improvement has happened, therefore there is high probability even government of India may consider in the budget to give more money in the hands of people for them to spend, so that the economic activities not just driven only by the infrastructure activities, the economic activities will also be driven by the consumption-led growth that could come. Therefore, the companies largely would also be the beneficiary of the boost, but the pickup in the consumptions by way of increasing their revenue and sales. Ultimately, from government point of view, it will be a win-win situation in any manner as long as the volume increase compensate for the tax reduction that they may give.
Bala, given the current rich valuations and the overall macro backdrop, as a fund house, what do you think are the sectors that will continue to provide good returns, and possibly not just the ones that are existing? Do you see the emergence of some newer investor favorites?
I think clearly, as fund house, we see, I think capital sectors and power sectors will continue to be the driver, because a lot of focus is there in terms of spending in these sectors, including energy sectors would continue to be the driver. I think banking and financial service sectors, given the fact the wealth effects have been rising, and also given the fact that the digital connectivity in the country is so large, therefore the lending mechanism continues to be the driver of the next round of growth. Credit growth has been very, very strong. I see credit growth become even further going forward. Therefore, the banking and financial service sectors, which have gone through 4 years of consolidation, will probably become one of the dark horses as we move forward. At the same time, most of the domestic-driven sectors, which are allied sectors, the mid and small cap segment, though there has been some kind of concern, the mid and small cap segment has gone up so much, therefore, are we seeing any kind of concern valuations? But my own belief is, as long as the cost of capital remains low, as long as the companies are able to actually show rate of growth about 20-25% in terms of rate of growth in smaller size companies, probably the valuation will remain a bit prolonged the same way I think as we have seen today. Therefore, valuation concern generally does not affect the market sentiment as long as the growth expectation in the economy remains intact. That's what I see going forward.
Siddharth, it's a sign of things to come. Today's top performing index is the Nifty PSU Banking Index, 8.5% higher. Needless to say, this is a record high, and it is needless to say that all 12 index components are at the day's highs. This is, a sign of things to come, that banks, especially in the corporate lending part of the economy, will see a huge demand coming in from all those corporates who were sitting on the fence and waiting for this main election and the exit poll to come in, and therefore plan their capacity expansion. Bala sir, I just also want to take your view on this monsoon that is coming up really well in terms of the two predictions that we've had so far, and the good effects that it will have on the FMCG and the agrochemical space, which have underperformed over the last 3 years. As a fund house, how are you positioned at the moment, and how do you see the next 2 quarters for these two sectors?
In fact, we have taken a bit of contra call on this space. One, the last few years of consolidation on these sectors definitely make them relatively cheap in terms of valuations. And second is the consumptions again have gone through a phase of consolidation. As you rightly put it, the agriculture economy does well because of on the back of good monsoon. And also huge amount of work that is now happening in the rural sector in the country, including agri sectors, uplifting the rural economy, and then the smaller size cities coming in with the real estate boom that's coming in terms of land prices going up. But all put together, if you look at it, you'll probably see consumption-led growth also coming back. Therefore, as a fund house, we do have a contra bet in those two segments, including the FMCG companies, especially the discretionary buying also will come back. That's why we've taken a bit of contra call, but at the same time keeping an overweight position both in banking as well as the capital goods sectors and power sectors, engineering capital goods sectors.
Okay. Coming again to allocation of capital, I am sure over this weekend and today morning, बाला सर 1000 करोड़ रुपया तो आया होगा आदित्य बिरला सन लाइफ म्यूचुअल फंड में एज फ्रेश सिप्स. सो वेयर आर यू गोइंग टू डिप्लॉय इट? सी द स्माइल सिद्धार्थ, दैट्स गेटिंग वाइडर एंड वाइडर. Maybe I have underestimated the money.
I think what you are saying, if it's really true, I think I'd be extremely happy. Given the fact 1000 koti SIP ek din mein aana is not that easy. So of course, definitely the momentum is there, and I presume I think momentum will continue as far as the SIP.
Tomorrow, on line with the exit polls, then will 1000 crore come tomorrow?
Okay, it comes over a period of time. That's our aim actually. Because SIP doesn't come on a single day. It comes over a period of time. Definitely, the endeavor would be to more to encourage investors to come in for long-term equity investing, and that I think remains. I think flow is something would remain permanent, given the fact that we still have many people are underinvested in equity market, and including Aditya Birla mutual in terms of ownership. So therefore, I would only assume more and more participations will come. So the happy news is not just going to be one day. I think it's going to be a bit prolonged for maybe at least for next 5 to 10 years in terms of a prolonged period. You will see that happiness continuing. Given the fact we are marching towards $10 trillion economy, $10 trillion market cap, and wider participations coming in from the public at large in the Indian capital market, I think we'll keep the whole momentum for a longer period.
Bala, I just want to ask a macro sort of question before Shail comes back. You know, the first 5 years of the Modi government were different from the subsequent 5 years. In the first 5 years, there were certain disruptive reforms. There was a social and rural agenda. Second term, COVID and managing the aftermath, and we saw this very significant increase in capital expenditure. Can the new government, Modi 3.0, as all polls seem to suggest, continue to afford to do that, or would you like a reprioritization and therefore the focus of the sectors and companies that will benefit from Modi 3.0's policy agenda would change?
I think, Siddharth, if you look at the way they have been progressing, making the economy more sustainable, in investing in the core economic activities, which is nothing but building the right infrastructure in every segment of the market. I think there was a period where infrastructure means we normally used to think of only about road sectors. I think the definition of infrastructure got widened and got increased over a period of time. But still a long way to go, especially building a huge capability building in the areas of railways, in the areas of power, making it more self-sufficient, in the case of energy preservation, in the case of water preservation. I think that thing will keep going up. And in the current situation, I think where they were about 5 years back, the last 5 plus 5 year terms, the finance positions was actually more weaker than I think what we are today in terms of tax collection, fiscal deficit being better than what we was in the past. Currency stability is far higher. FDI investments in the country could, I think, probably could go up manifold. We'll see that going up manifold in the coming years. Make in India theme is not restricted only to the Indian companies. I think more and more companies are looking at India as a base for making as a manufacturing hub, you probably will see exports from India, I think, increasing quite significantly. Therefore, you'll have more dollar flows to actually fund the growth in India. I think if you look at it from all angles, definitely I think it's for the government what they can do better is actually fast forward thing because they have an experience, they have seen the execution excellence that's coming in. I think the government probably will prioritize in terms of fast forwarding some of the activities so that we are able to achieve some of the target that they have kept actually don't wait for the full 10 years to come and rather they can probably try and cover it in the next 5 years itself. That I see is one change happening. Second, definitely is the employment in the country. Of course, skill development has been one of the big area of focus. I think employment is something which has been a question mark in terms of how much is employment happening. Therefore, the government may probably pursue how to make more and more people become entrepreneur so that you'll have many startup companies are being encouraged, funding is being made available. I think I was just looking at the BJP manifesto. I think clearly there are 3-4 areas where they have taken, which are more long-term in nature in terms of taking care of the funding needs of the people who actually want to set up a business, but they need to have an easy access to the business and easy access to the money is something that's also being focused. I think these are some of the areas I would assume probably they make it really work and it could probably make it more sustainable as we move forward. I think ultimately making India as a place to go from the overseas point of view, I think would be the big area of improvement that you could see in the next few years. I think the election results would reinforce the confidence. Of course, domestic people have been anyway confident, but overseas investors will become more confident in India when it comes to the question of having more business, economic activities, commercial activities in India. I think that's why I think we'll see the reverse flows coming in, which the government probably will be able to fast track, invite more people to come to India and the manufacturing sector.
Okay, Bala sir, while today's reaction could be dubbed knee-jerk based on an exit poll, but two important things are in the pipeline, which is the budget in the month of July, as also the 100-day program that Prime Minister Narendra Modi alluded 2 months ago. In your own estimate and your own expectations, what are the three major things you hope to hear from the Prime Minister himself during this document, when this document is tabled, and of course over the next 100 days agenda?
I presume, I think it's more of lifting up what they have done in the last few years, basically increased allocations, bringing in more speed to the executions. I think that probably would be making it more sustainable from the economic growth point of view, but nothing beyond one can expect within the 100 days, making it more, making the roadmap very clear from the point of view of continued investment of higher scale. I think that's something would remain. And second is, given the fact that fiscal improvement is happening, there is a high probability that the way they looked at tax rates for Indian corporate, which has been one of the big drivers, just about 3 years back, today the Indian corporate tax rate is about 25%. There is a good reason for taking a similar approach even for individual taxes so that people can actually spend more money to lift the economy at the next level. Probably that could be one of the paths that can get, given the fact that I think we are seeing increased compliance with respect to the tax collections. I think we are seeing more and more improved compliance is coming in, which essentially means government can take certain bold steps to even the increase overall consumption pattern in the country.
Absolutely, and that's an important point that you make because the market narrative between now, the point that you were making, Shail, the next major pivot will of course possibly happen around the budget, because as long as there are no negative surprises in terms of capital gains taxation, for example, because that's also overhang. And Bala, you picked up this very important point of something for the middle class. That's for the government to decide. One final point really that keeps coming up. The fact that the Reserve Bank of India also has a policy announcement, the MPC, on June 7, outside of elections, outside of monsoon, is that a very key thing that we need to look forward to, or should we be prepared for a status quo till possibly the end of the current calendar year as far as interest rates are concerned?
We should look for a status quo, and given the fact that US Fed is not going to cut the rate anytime soon. I think they will take still more time. And there has been a narrative that higher interest rate to stay for longer, higher for longer. I think from India point of view, there is no going to higher for longer. We are reasonably fair in terms of interest rates at this point of time. And also given the fact that the cost of borrowing in India is relatively cheaper, there is absolutely no need to look at the interest rate cut. And also given the fact that inflation is largely under control. So therefore, from Reserve Bank of India point of view, we want to just stay, rather be happy with, rather have an expectations of status quo policy, rather than creating a story that in RBI will start cutting the interest rates. The moment they do that, the interest rate difference between US and India will become so narrow, it could probably may not be going well when it comes to the question of even bond comparison in terms of interest rates parity. So therefore, at least next two policies which we expect RBI to maintain a status quo policy. There is absolutely no need to do anything as far as interest rate concerns, unless until we see a significant drop in the global inflations, and therefore on the back of it we have to cut interest rates.
Right.
Absolutely.
We are still far away, I would say.
Okay, Balasa, the last one from us. If you could just use your ample market intelligence to tell us and our viewers, has the rally actually peaked in defense stocks and in railway stocks? There is this apprehension that they may have run up very, very sharply over the last 15, 20, 30 days, and that, the good times may have ended. What's your own gut feel on these two sectors, railway and defense?
I think, of course, the earnings have not been supporting the price rise. I think one has to accept. Right now, they are driven purely on the basis of the macro, the action that is happening in the sectors, and the future investment is being made on the sector to become more powerful. That something is actually driving it, but not the real valuations. The question which always remain on this sector is whether you will see the continued favorable macro environment of the sectors, or see a diminishing market environment sectors. If we go by that principle, and this sector will continue to have a favorable macro environment, favorable macro development, which will keep on improving the earnings of this company in terms of catch up. I think this company will have to do a lot of catch up in terms of earnings coming in. Therefore, entering will be very difficult. If somebody has the exposures, probably is right onto the boom, right on the momentum, rather than taking a reverse call.
A Balasubramanian, as always, thank you very much for sharing those insights, your masterly view into the markets today, tomorrow, and in the future. We'll connect with you again very soon. Until then, goodbye and thanks very much for joining us. Shall we wrap up programming here and look forward to how the markets will close today?
Siddharth, I think what is of really critical importance is to see how our foreign friends react to this lovely opening that we've had. Remember, the Middle East has almost woken up, and now people will be opening to this, seeing this wonderful rally in parts of Europe. So I think the short covering that you were hoping that would happen in the morning might just start taking place in the last 1.5 hour of trade. And the real deep-pocketed short players will wait for tomorrow to see the actual performance of the voting patterns, and then maybe start cutting their trade.
All in all, today's story also a story of Atmanirbhar stock market. We'll be back just in a bit. Do stay tuned in.
Another hill state, beautiful state again. 5 seats on offer, remember, in the state of Uttarakhand.